Investing in the stock market can be a great way to grow your wealth and achieve your financial goals. In this video, we'll guide you through the process of moving beyond just saving your money and turning it into investments. We'll show you how to become a savvy player in the stock market game. The first step in becoming a successful investor is understanding the basics of the stock market. We'll cover the fundamental concepts, including the definition of stocks and the stock market itself. Stocks represent ownership shares in a company, and the stock market is the platform where these shares are bought and sold. There are two main types of stocks: common and preferred. It's essential to understand the differences between these two types to make informed investment decisions. Common stocks offer voting rights and the potential for higher returns, but they come with a higher level of risk. Preferred stocks offer a fixed dividend payment, limited voting rights, and a higher priority in the event of a company's bankruptcy. Before we start, please like the video, subscribe to the channel, and press the bell icon to be notified of future uploads. Let's back to the video. The role of a stock exchange is also important to understand. The most well-known stock exchange is the New York Stock Exchange, NYSE. But there are several others around the world. Companies list their stocks on an exchange to make it easier for the public to buy and sell their shares. To buy and sell stocks, you'll need to open a brokerage account with a firm that provides trading services. Your broker will act as an intermediary between you and the stock exchange, executing transactions on your behalf. The price you pay or receive will be determined by the current market price. Understanding these basics is crucial to becoming a successful investor in the stock market. With this knowledge, you can make informed decisions and turn your financial dreams into a reality. So grab a pen and paper and let's get started. Number 1. Educate yourself. This involves understanding the basics of how the stock market works, as well as different investment strategies and risk management techniques. You can start by reading books, taking online courses, and researching reputable financial websites. This knowledge will help you make informed investment decisions, avoid common mistakes, and potentially achieve your financial goals over the long term. Remember that investing involves risk, and continuing to educate yourself on market trends and best practices can help you navigate these risks and stay on track towards your objectives. Number 2. Set your investment goals. Setting your investment goals is a crucial step in starting your stock market investing journey. This involves determining your risk tolerance, time horizon, and financial objectives. For example, you may want to invest for retirement, to generate passive income, or to build long-term wealth. Your risk tolerance will determine how much risk you're willing to take on in pursuit of your goals, while your time horizon will affect your investment strategy and the types of stocks you invest in. By setting clear investment goals, you can make informed decisions about which stocks to buy and when to sell them, and stay on track towards achieving your financial objectives. Number 3. Open a brokerage account. Opening a brokerage account is a crucial step in starting your journey as a stock market investor. A brokerage account is an account that allows you to buy and sell stocks, bonds, mutual funds, and other investment securities. A brokerage firm acts as an intermediary between you and the stock exchange, executing your trades on your behalf. When choosing a brokerage firm, it's important to consider factors such as fees, investment options, customer service, and the firm's reputation. Some brokerage firms also offer additional services such as research and analysis tools, educational resources, and investment advice. Opening a brokerage account is a relatively straightforward process and can often be done online. It typically involves providing some personal and financial information, choosing the type of account you want to open, and funding your account. Overall, opening a brokerage account can be a great way to start investing in the stock market and growing your wealth over time. Number 4. Research stocks. Researching stocks is a critical step in stock market investing. When researching stocks, you should look at a company's financials, management team, industry trends, and other relevant factors. Start by looking at a company's financial statements, including their balance sheet, income statement, and cash flow statement. This will give you a good idea of the company's financial health and profitability. You should also research the management team and their track record, as well as the industry and market trends that may affect the company's performance. You can use a variety of resources to research stocks, including financial websites, brokerage research reports. You can make informed decisions about which stocks to buy and when to sell them, and potentially achieve your investment goals over the long term. Number 5. Buy and sell stocks. Buying and selling stocks is a crucial aspect of stock market investing. To buy stocks, you'll need to place an order through your brokerage account. There are two types of orders you can place: a market order or a limit order. A market order is executed immediately at the current market price, while a limit order allows you to set a specific price at which you're willing to buy or sell the stock. When selling stocks, you can place a similar market or limit order to execute the sale. It's important to consider your investment goals and risk tolerance when buying and selling stocks. Avoid making impulsive decisions based on short-term market fluctuations, and always conduct thorough research before making any trades. Regularly monitoring your investments and making adjustments as needed can help you stay on track towards achieving your financial objectives. Number 6. Monitor your investments. Monitoring your investments is an essential aspect of stock market investing. You should regularly review your portfolio to ensure that it's aligned with your investment goals and risk tolerance. It's also important to keep up with market news and trends that may affect your investments. By monitoring your investments, you can make informed decisions about when to buy or sell stocks and make adjustments to your portfolio as needed. Some investors choose to set stop-loss orders, which automatically sell a stock if it drops below a certain price, as a risk management strategy. Remember that investing involves risk and that your investments may go up or down in value over time. By monitoring your investments regularly, you can stay on top of market trends and make informed decisions to help you achieve your long-term financial objectives. Thank you for joining us on this journey to understand the basics of the stock market and how to start investing. We hope that this video has helped you gain a better understanding of the fundamental concepts of the stock market and how to become a savvy player in this game. If you found this video helpful, please don't forget to hit the like button and subscribe to our channel to stay updated with our latest content. Also, we would love to hear from you, so please leave your comments and let us know your thoughts and questions on this topic. Remember, investing in the stock market can be a great way to grow your wealth and achieve your financial goals, but it's important to approach it with a well-informed and disciplined strategy. So keep learning, keep investing, and keep building your wealth. Thank you for watching, and we'll see you in our next video.